Hello traders and welcome to another video review. Today is Monday, January 20th, 2025. Let's find out what's going on the economic calendar for today. We're going to the economic calendar webpage right now. Let's just switch for the important and most important data releases for today. So what do we have here for Monday? People Bank of China loan prime rate stays at the same level of 3.10%. Industrial production in Japan down -2.2%. German PPI down -0.1%, way below the expectations. PPI prices from the Switzerland at 0%, way below the expectations, but better than the last month, of course. And at 9 o'clock, World Economic Forum in Davos annual meeting will start. At 11 o'clock, we got the Eurogroup meeting. At noon, we got Bank of Canada Business Outlook survey. And then at the end of the day is electronic card retail sales from the New Zealand. However, at 6 o'clock, of course, there is an inauguration of the new President of the United States of America, Donald Trump. So this might be very interesting to keep an eye on. Otherwise, not too many interesting or maybe high importance data releases for today. Let's save something for next days. Nevertheless, let's just switch to the charts. We start with the review. We start the review with the euro dollar, I guess. Wrong, mistake. We are going to start with the Bitcoin, of course, and the reason is very, very good. Why it happens? If you watch the cryptocurrencies over the weekend, you might know exactly what I'm talking about. And during this last 4 hours, the Bitcoin made new all-time high, $109,986, basically $110,000. This is the new all-time high. So this level here, the previous all-time high, will act now just a little bit as the resistance, still as the resistance, right? And now this one here we have on our level, on our chart as well. Please pay attention to something quite important. We got the bounce below the demand zone, so right now we can even move this demand zone a little bit lower. Let me just grab my, there you go, let me just grab my my levels, there you go. So this one is not important, and the zone, we are going to extend the zone even here. So now this is a very, very nice demand zone, very, very thick and solid. And since the bounce, we got movement towards the trend line, pullback, breakout above the highs, right? This lower high, pullback, and then big breakout way above the all-time high. Please notice we tested the trend line, so this trend line is valid. Market confirms this trend line. It recognized the trend line and it sees this trend line as the opportunity to continue the up move. So this trend line was defended by bulls. New all-time high on Bitcoin, and new very, very interesting things are going on the cryptocurrency markets all over the place. Well, let's just stick to this. Euro dollar, of course. Let's start with the euro dollar. For our chart of the euro dollar, nothing is going on. Boring chart for the euro dollar. This time we got the rejection of the technical resistance at 1.0329.35. This is the very tight zone. There is the 100 periods moving average, bearish engulfing pattern, range trading, the moving average efficiently prevents the boost from rallying higher, which is why we got this movement inside of the trading range. We are waiting for the breakout. Because it's still very, very tight, very, very narrow trading conditions on the euro dollar. Let's find what's going on the British pound. The same situation here. Not much is going on since the bearish engulfing pattern was made on January 15th. We back inside of this congestion range. There is nothing here, but basically nothing interesting for us. No technical pattern, no inverted head and shoulders, nothing is here. basically boring trading around the level of 50. Some people like boring trading conditions, obviously, and it looks like this level here, one point, let me just mark it to the newest levels. There you go, 1.2248 looks like the very nice spot for the bears that are pushing the prices lower. Every time it goes up, the bears are using this to push it lower. And the other level here, some sort of the technical, let's say, support, 1.2162 local technical support located here. So the range is very tight. Let's take a look at the S&P 500, because today we have the big day for the President Donald Trump, inauguration of the presidency today at 6 o'clock p.m. Roughly GMT or GMT +1. What is going on here? 6,000 points claimed on this level. We broke above this trend line. Again, look at this. We got the trend line here. We broke above it. Local high 6,012. Pullback. Test the trend line. Green candle. Green candle. So just as expected, and as our arrow is showing us after the breakout above 5,878, we got the breakout above the trend line, test the trend line, moving average, breakout above the moving average, test the moving average, breakout above the trend line, test the trend line. What's next? Wave B high. Wave B high 6,020. So that's the target. As you can see, the arrow is showing, that's the target. But then if this level is violated, we can go to all-time highs today on the S&P 500, because it might be very bullish trigger the inauguration of the Trump presidency on the S&P 500, which means that gold apparently, which is very expensive, look at this, we just hit 2,724, $1 below the previous swing high. Okay, very expensive gold. Gold market is right now, and if this zone here, this very peculiar zone, let me just add another line, because I've missed the other line, so it is supposed to be here. If this zone is violated, you can see it here, then of course we are going straight to the all-time high. Extremely overbought market conditions, movement downside towards the level of 50 on the RSI, bullish engulfing pattern on the end of the downside movement. We can remove this one, because it looks like the market is in favor of this level here, 2,688. That's the technical support. As long as we trade above this level, the outlook remains bullish for gold. All right, what else can we speak about? I think that's everything that we have in our mind. Of course, the US dollar to the Japanese yen, as the last of our markets, we very like to analyze this market. Recently we've made a local high, 158.60, 58.89, movement towards the moving average, pullback to the upside, breakout below the moving average, breakout below this two very important technical support levels, 155.97, new low 155. Movement to the upside to test the trend line, rejection, and now it looks like with these conditions here, which are below the level of 50 right now, around 47 points, the outlook remains bearish for the US dollar to the Japanese yen in the short term. Possibly even we might test this trend line here before something bigger will trigger trend continuation move, and trend is to the upside, right? The trend is up. Key technical support measured by the extreme 154.49. So that's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.